There were 12 paper millionaires in our company, and I lost all that money. I lost their money as well. Now, thankfully, when you go through something like that, you begin to go deep and say, okay, things didn't turn out so well. But you know what I'm going to focus on? I'm going to focus on what I love the most. And what I loved was technology and how it can impact and change the world. So we launched a company called Hostopia, and 6 years later, it became #1 fastest growing company in Canada. And 2 years after that, we went public. And 2 years after that, we sold it to a Fortune 500 company.
Welcome to the Startup Huddle. I'm your host, Jozef Maruscak, and I'm excited to introduce you to the current and upcoming leaders of the startup tech world. We'll discuss digital products and key takeaways for life and professional growth. So grab a coffee and let's huddle up. Hello, everyone. On today's episode, I would like to welcome Colin C. Campbell, who is a serial entrepreneur. He has founded and built several internet companies with a combined valuation of over $1 billion. He's also an author of a book called Start, Scale, Exit, Repeat, which is the #1 selling book in Amazon in several categories, won several international awards. So very, very happy that we have here such a seasoned entrepreneur. Welcome, Colin.
Well, thank you for having me on.
So maybe let's start a little bit with your background, because definitely your background is very interesting. So tell us maybe a little bit about how you got into entrepreneurship. What the companies did you build in the past, and maybe what you're working on now?
Yeah, just started right out of college. I did what every college graduate does. I went to work on the family farm. That's it. I started on a family farm, literally selling and flogging vegetables. It was interesting, but very quickly, my brother and we had a love for technology, and we launched a software rental business out of Toronto, Ontario, which didn't last long. Actually, it went. It became illegal to rent software on January 1st, 1994, about 14 months after we launched the business. And because of that, we had to shut the company down. But what we were doing at the time is we launched something called a BBS. Now, this is way before your time. A BBS is a bulletin board service, and it was the way that people communicated before the internet. Okay, they'd come together with these phone lines and they'd connect. And that obviously didn't last too long either, because something called the internet came about. And as the internet started out, we decided to shut that company down, second company in a row, and launched Internet Direct. And we took Internet Direct to become the largest privately held company, actually publicly traded company, but the largest internet service provider in Canada. It became the third fastest growing company in Canada, and was one of the big success stories in Canada until the .com bust. There was not enough chairs to go around, and the music had stopped. And so the stock that traded at $19 a share, worth about $1.2 billion. I'm 29 years old here, okay? And 29 years old, and had about 13% of the company. We agreed to sell. We're publicly traded. We agreed to sell our company to a cable company. And on March of 2000, something happened. A judge decided to break up Microsoft, and the NASDAQ fell from 5,000 to 4,000. So our company decided to pull its offering, the $50 million offering, in hopes that the market would turn around. But guess what? The market at that time, the NASDAQ, went to as low as under 1,200, from 4,000 under 1,200. It took 18 years to recover. So we had filed, fast forward 18 months later, we filed for bankruptcy protection, and the $19 a share, we sold for 6 cents a share. I mean, this was horrible. This was like, you spend 10 years building the company, you spend 10 weeks screwing it up on exit. And it really was the basis for the book, Start, Scale, Exit, Repeat, because when you lose that kind of money at a young age, it's like a scar. Like I often say, your startup failures are the scars of your past that guide you through your new adventures. But this was a huge scar, and it still exists today. Like there's a lot of paranoia that exists. And fast forward 6 years later, we took another company public. That became the fastest growing company in Canada, #1. And We took that one public. We sold it to a Fortune 500 company in 2008. I worked for that company for 3 years. And then in 2012, I was asked to speak at MIT to a group of very successful entrepreneurs because they wanted to know how I could start businesses, scale them, and exit them right at the right time. Like, think about this for a second. Here's the guy who had one of the biggest fuck ups in internet history, and I'm being told, I want you to speak at my conference because you're doing it right. Well, we had sold our last company, the one I told you about, the Fortune 500 company. We sold it a month before the Lehman crisis. All right, so there was timing is everything, and what I learned from that astronomical failure were two things: one, liquidity or control. Let's just get that off the table. Never sell your company unless you have liquidity or control. Okay. The second thing is bad things do happen. Now, let me fast forward to 2021. Can you remember that time? Some of the craziness that was going on in
Sure,
2021?
sure, sure. We were thriving at that point in time. Yeah.
Weren't we? And did you remember something called Bored Apes
Yes,
NFTs?
yes,
They're
yes,
selling
yes.
for $500,000. I mean, these cartoon images, digital images, are selling for like $500,000. Do you remember a company called GameStop?
Yes, sure, sure, sure. We
Yeah,
were
and the stock went to
following that
what, from
very,
two
very
dollars,
closely.
$2 to over $400, sort of defying economics. Um, like, do you remember SPACs?
Yes.
SPACs, special purpose acquisition companies. We had almost 1,000 companies go public that year. So that's one of the things I've been doing with my startup club, the company that we run now, is we're using empirical data to come up with the time to sell index, and we track IPOs, number of IPOs per year. See, here's the fact: everything falls from the top. IPOs are sort of like the top of the eco chain for the economy and startups. And then you got private equity underneath, then you got venture capital below them, and then you've got angel investors, and then you got, us on the bottom of startups, right? So everything sort of falls from the top. Sometimes you can have a delayed effect, and we saw that happen. But for the most part, we can actually track the number of IPOs per year and see if a market's a buyer's market or a seller's market or a balanced market. And right now, I can tell you we're 3.6 out of 100. That's what the TTSI that we run on Startup Club is, 3.6 out of 100. It is one of the lowest markets in history for trying to sell your business, sell your company. I mean, maybe for a successful AI company, it could be different. But so that's the premise behind Start, Scale, Exit, Repeat. It's all about. Actually, it should have been really been called Start, Scale, Exit. Take some money off the table, repeat, right? Because if you think about it, bad things do happen. And that's the lesson I learned in 2000. Bad things do happen. That's the lesson we all learned in 2021. Bad things do happen. When things are going really good, anecdotally, we should look at that and say, okay, exit stage left. Let's take our money, let's sell a company, and let's move forward. And there's a lot of tax benefits to selling companies. Capital gains are much lower tax rates. There's a lot of benefits to doing it that way. So that's the premise behind the book.
Very, very interesting and intense aggregated knowledge, I would say, over all the years that you've been an entrepreneur. Uh, Maybe just to before we move further, like how does one get over something like an event that happened to you when you were essentially my age? Because when you were saying that, 94, that's when I was born. So how does one get such a young person can handle
Yeah, so
such a crash?
you were 6 years old when I was worth $130 million, and 7 years old when I was worth nothing again. It's not easy. I mean, look, I felt like I wanted to go home, curl up in a ball, and that's it. I mean, this was not just a failure of my own personal wealth. I had failed my staff, my investors, my family, the customers, the whole company had failed. And I had made the decision to merge this company and give up the reins, give up control. And we agreed to an 18-month lockup. So unfortunately, that was a stupid mistake, whatever. We agreed to that lockup. And it didn't just impact me, it impacted everyone, everybody I knew. There were 12 paper millionaires in our company, and I lost all that money. I lost their money as well. Now, thankfully, when you go through something like that, you begin to go deep and say, okay, things didn't turn out so well. But you know what I'm going to focus on? I'm going to focus on what I love the most. And what I loved was technology and how it can impact and change the world. So we launched a company called Hostopia, and 6 years later, it became number one fastest growing company in Canada. And 2 years after that, we went public. And 2 years after that, we sold it to a Fortune 500 company. And the investors made a huge, huge multiple, selling for 17 times EBITDA, trading at $4.55 a share. Next day, it was public as well, trading at $10.55 a share. So focus on what you love, and that's it. And there were a lot of people at that time who were dropping out of the .com community. The internet's done. We're all finished with it. They came in for the quick buck, and they all dropped out. We stuck with it. We believed in it, and I think that's what it's all about. It's really going deep into what you really care about and what you really believe, and having fun with that. And then we've done that now over and over again. We did .club, which we sold to GoDaddy. We did Geeks for Less, which is 800 people, programmers in Ukraine. It's been a challenge with the war there, but we seem to be doing okay. We're surviving. We're surviving. Uh, you know, we've done a number of companies, and yeah, I will say this: when things look really, really good, it's time to take your chips off the table. And it's okay to let other people make money. See, a lot of people think at the time, oh, if I just hold on for a couple more years, but things change. The environment changes. The market changes. And that's what start, scale, exit, take some money off the table, repeat really is all about.
Makes a lot of sense. And it's kind of interesting that while you were about to sell the first company for huge amounts of money and be successful, then it suddenly crashed. Then also the second company that you were selling, you did it at the least possible time, probably, right? As you mentioned that then another financial crisis started. So
Yeah, I didn't know what I was doing. I didn't know what I'm
yeah,
28 years old. I don't know what I was doing. I'm sorry. Okay, you're 28 years old. I didn't know what I was doing. I'm like an idiot, right? I was an idiot. Like I didn't know what I was doing. Like
from those two examples at least, and of course we can then get into how were you actually writing the book, because I know that you interviewed quite a few very successful entrepreneurs and people who are very good in particular aspects of doing a business and that have great stories behind that. So what can we learn then from the successful and the unsuccessful exit of yours, and what do you think about that, and what did you write about the exits in the book? You mentioned so far two things, and that is one is liquidity and control. You also run a time to sell index. So can you elaborate a little bit more on when is the right time to exit?
yeah, so I do believe 50% of the timing of the value of a company is exit. Okay, that's the key right there. Uh, Second is there's a lot of components to exit, and I would say that who you choose to sell to actually is critical. So I'm going to break it down, and we do this in the book. I'm going to break it down into three areas. You're going to sell to cash flow, which often is in the United States is private equity. Okay, and they tend to like to leverage the plays as well. So you've got like a company, a private equity firm. They might borrow at 8, 9, 10% interest rate, but they need to make 16, 17, 18% interest. Okay. And then you've got competitors. I like competitors because they can come in and they can eliminate expenses and give you a multiple. Now, they're not going to give you a full multiple as if it was based on your cash flow. Sorry, your current market value. They're going to give you a higher multiple than your current market value. Okay. But they're not going to give you a multiple based on their total consolidated value. It's somewhere in between. And usually it's like almost like a midpoint. But here is the nexus. It's strategic buyers. If you can sell your company to strategic buyers, then what they're going to do is take your technology, your systems, or whatever it is, and they're going to apply that to their network, their distribution. And by doing that, they will pay you a much higher multiple. So let me be clear. So I can talk about Hostopia. It sold for 17 times EBITDA. We had a small business email hosting platform that we sold to. We sold the company to Deluxe was the company. They're a Fortune 500 company making hundreds of millions of dollars a year who have millions of small businesses. So they're thinking, can I take this platform and sell that to my millions of small businesses and get X amount? And how do I know this? How do I really know this? Because I worked for a Fortune 500 company for that 3-year period, and I bought a dozen companies. And at the time when I bought those companies, we're looking at, and I have an army of people, and they're all analysts, and they're all looking at the stuff and saying, well, if we buy that company, we can leverage it this way, or we can do this. And so we want to try to sell to the strategic buyer because that's going to make a huge difference. So think about timing and think about who you sell to as well. And actually, we literally wrote down the people mentally of who we wanted to sell .club to. .club was an alternative to .com, .net, .org, and we sold 1 million domain names. But we said we want to sell to GoDaddy. So here's a perfect example of a company that has much broader distribution than we had, but we had a great TLD. We had a great top level domain, and we could sell. We sold 1 million names, but they can sell a lot more because they got bigger distribution. So I think those two things are critical on exit.
And what did you mean by liquidity and control?
So, like in the example of, we sold the company, and it was a $180 million valuation. It went to over $1 billion when we won the license for internet in Canada, and it was publicly traded. But we had agreed to an 18-month lockup, right? So we didn't have any liquidity, and we didn't have control. So we aren't controlling the company anymore. I was not the CEO. We were sitting in the back seat of the car, sort of like, and I fought the CEO tooth and nail on so many different issues. I had big fights in the company, but it didn't matter. You're not in control anymore. So I know this is something that you're going to find exceptions in history, okay? Where they have consolidations and you can go into that. But if you are in a position where you can sell your company for stock and it's not freely tradable into another company, and it looks like a good story, that may be a great opportunity, but I will never do it. I will never do that again. Look, I lost how much? I lost 95% of my wealth when I was 9 years old. So what am I going to do? Do it again? No. No, 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 no. We're not doing that. What we're going to do here is when we sell our company, we're going to get liquidity. And that means that we're going to get cash or free trading stock. And I don't mean small penny stocks. I mean really free trading stock. Okay. There are some exceptions to this. Okay. So I'm going to give you the exceptions. So one of my companies was an ad company up in Canada. We did all the taxi cabs. We had a monopoly on I shouldn't say monopoly. Sorry. We had all the taxi cabs in Toronto, and there were competitors who tried to compete with us. But we had all the taxi cabs. And there were the advertisements on top of taxi cabs. And we hated the business. We thought we could go digital really fast, geo, all that kind of stuff. We didn't like it. We wanted out of the business. But instead of just shutting the business down, which we had invested $1.5 million into, we decided to sell to our competitor. And we sold it to our competitor for zero cash. So I'm talking about an exception here. When you want to get out, when you're done, when you're finished, then try to find it. Don't just kill the business. Try to find some way to monetize it. But for the most part, if you have a successful business, do not fall for the shysters and the people who are out there who are going to try to convince you that if you do this and you come along for this ride, you're going to be successful, because ultimately 9 times out of 10, they're not, and you lose everything. I mean, why would you do that? Why would you spend 10 years of your life, like I did in the 90s, and then 10 weeks fucking your company up? Why would you do that? Why would you do it? Just don't do it. I always say I'd rather make less money, but then have liquidity or control.
Some great advice. And these are just a few examples that you were able to go through and experience when exiting. But then how did you come up with the book? Because there you have, again, you are focusing there on the starting of the business, right? And how to scale it properly. Then then again, repeat, like what to do to start a new business again. So what led you to writing the book at the end of the day? Was it the bad experience you had with exiting when you were younger, or there
No,
was more to
I
it?
think that was the premise of the book. If you really think of the genesis of the book, that's where it really sort of came out of. But it wasn't until 2012 when I was asked to speak at MIT on this topic that I had to speak to like 60 very successful entrepreneurs. I'm like, what am I going to talk about? And so I just sort of sat back and thought about, okay, what were the patterns that existed in all my successful companies, right? They were highly scalable, highly defensible, or at least I could build a defense, build a moat around it, and they caught an internet wave or caught a tech wave, okay? And those patterns were the first elements of starting a business. And then I began to think about, okay, on each stage, start, scale, exit, repeat, we had a story, a people, money, and systems. Okay, there's 4 areas: story, people, money, and systems. And they change from start to scale to exit and repeat. They're very different between all different modes. And you need to look, as an entrepreneur, our instincts are sort of stuck on start. Like we sort of this dominant personality profile, and this is what we do, and we focus on succeeding, and we delegate tasks, and we manage everything, and then we begin to think, how do we scale this? But things begin to fall off the track. Like the wheels definitely come off the bus because you know, we know how to do this business really well, but what we don't know is how to motivate others to do this business really well. And that's the secret code. That's the secret there, is that we need to identify and hire other great leaders who have dominant personality profiles and who can help us lead the company and scale the company without us in it, or at least without us being the bottleneck. And in most businesses, the entrepreneur is the bottleneck. And that's why the vast majority of companies fail to scale. So how it started? Yeah, how it started. It started with this session. And then I'm like thinking, okay, look, this is too good just to leave it in one MIT session. Uh, let me start writing this book called Start, Scale, Exit, Repeat. So the title came up. I came up with the title in 2012, and we published the book in 2023. I wrote on the airplanes. Whenever I travel on airplanes, I traveled to many countries, 50 countries for my businesses. I would just write on the airplanes. I write stories. I write this, put it all together, and then they got Forbes books involved 2 years ago. We interviewed over 200 people, and let me tell you, we had some really cool people. We interviewed Jeffrey Moore, who wrote "Crossing the Chasm: Inside the Tornado." I thought that was probably the most cool of my life. I'm like, I read this guy's book 20 years ago. It's like a top 10 business book of all time, and here I am interviewing him, and I thought that was really cool. And that was the genesis of Chapter 3, which is catching a tech wave. I thought that was very cool. And then we also interviewed Vern Harnish, founder of EO, and also a very big entrepreneur and consultant. We interviewed Joe Foster, who founded Reebok. That was an interesting story. Here's a guy, I want to digress just for a second. Here's a guy who starts a business with his brother. He leaves his father's business because they have fights with his uncle. Decides to start a brand new shoe business. 19 years of running this business with his brother. He gets in 1979, he got to $9 million in revenue. Okay. He managed to get a review of his running shoes and wins 3 5-star reviews in Runner's World. He gets a distribution deal from those reviews in the United States. So how important are reviews today, right? How important is distribution today, right? He gets a distribution deal, and within 1 year, he goes into the white space. They created a product that no one else had for for not CrossFit. Sorry, early on it was the oh geez, the Reebok. I can't remember the name of the sport right now. Okay, I'll get it in a second, and you'll probably remember this because somebody wears his shoes on public television, and that's probably one of the first influencers. But Jane Fonda wore his shoes on television, and the sales went like crazy. They went from $9 million to $900 million in 4 years. In fact, it became the largest shoe company in the world in 1986 over Nike. They actually were beating Nike in 1986. I still don't have the sport. What's the name of that
Yeah, I
sport?
think it says on Wikipedia. Actually, I was just trying to Google it now.
Oh my gosh.
Apparently, it's like freestyle aerobic shoe.
Aerobics,
Weird.
thank you. Aerobics, thank you. Aerobics,
Yeah,
yes.
yes, aerobics,
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 yes.
indeed.
Okay, exactly. It's such a common phrase today. Like we're like, what was that? Now, okay, I got the book here. I can actually go look it up. Oh, okay, that's what it was. So what a phenomenal story that she wears the shoe. They make shoes for aerobics, which was weird at the time because it's all running shoes. They make shoes for aerobics. They go in the white space. They do something different, something unique and different. I call it an X factor. And then she wears the shoes. And I asked Joe Foster, I said, Joe, did you pay her to wear these shoes? And she goes, no, she paid me to wear these shoes. So we've become great friends, Joe Foster, and he's turning 90 this year. 90 years old. What an incredible person. He's in the book. And we have a lot of those stories. The book is really a compilation of stories that draw conclusions. Like we wrote this book. It's 58 chapters, this book, and it's written for the ADHD entrepreneur. It really is. And you probably don't know this, but 29% of entrepreneurs are actually ADHD, and the others are on the spectrum of ADHD. But the reality is it's broken down into very small. It's a big book. I admit that. Forbes books calls me, what are you talking? Like, this book is double the size of any of the books we've ever published, or average book. But it's meaningful. Obviously, it's gotten a lot of attention, and but it's very digestible. It's got the very short chapters, very fun stories, very very interesting stories, and then we draw conclusions, and people can learn from it as well.
Yeah, but it's long, but it has clear structure, clear chapters, and
Yeah,
clear conclusions, right? So not that difficult to remember or learn from.
exactly. And you can jump to whichever section you want. You want to look around about exit. You want to learn about start. You want to. My favorite section is repeat.
Mm-hmm.
Right? Because that's what, if you can understand what serial entrepreneurs do over and over again, if you can crack that code, you can succeed. Right? So that's what I love about that chapter.
Yeah, but that chapter is from essentially from the moment of exit until starting a new business. Like, how do you approach it, right?
No,
Not really.
you haven't
Okay,
read the book. All right, I'm
I haven't
joking.
yet. No.
Yeah, I know. I'm teasing you. It's a big book. So I talk about repeat as being, look. Let me look up. There's no way. Okay, I started a business. I told you in 1993. It was a software rental business. As part of that, we had a membership club for a BBS. The rental business shut down, but the BBS kept going. BBS has died, but we had internet access to the BBS, and it ultimately created a company called Internet Direct. Internet Direct in the 90s led to a company called Two Cows. Two Cows was a software download site, etc. It also led to a company called Hostopia, which we sold in 2006, and et cetera, et cetera, et cetera. We sold 2099, whatever, 2006 for Hostopia. And then while I was at Hostopia, we did a study of new TLDs, and .club was one of them. And then when they opened up the market, we launched a .club. While I'm at .club, I get these phone call. People start calling me up and saying, "Hey, your domain, your TLD's taken off on Clubhouse. During the pandemic, Clubhouse was blowing up, and they're all buying .club names. So we launched Startup Club on Clubhouse, and today I'm talking to you. So what did you just see there? Everything is connected. And if you're in a core business and it's doing very well and you're bored, now let me be clear here, very, very clear. Do not ignore your core business. Do not do what a lot of serial entrepreneurs do and get distracted. Oh, laser, like a cat, with a laser chasing the laser. Don't do that. That's not what I'm talking about here. When your core business is doing really, really well, then you're going to want to seek out opportunities within that business, right? And there's 4 or 5 other companies I never even mentioned that we spun off from the existing companies and whatnot. When you start getting bored, that's when you're going to want to start thinking about how to get your next business, how to launch your next business, and that's it. Because if if you do that and your business is humming along like a Swiss clock, it's doing really well, and you're bored, then you start launch the next company. You can do it a lot more easily when you're within your existing company. First of all, you're going to see opportunities when you're in a company. And second of all, you might have resources. So for instance, when we're at Internet Direct, we launched Hostopia, and Hostopia sold the platform back to Internet Direct. Internet Direct was our first customer. Now, as long as you disclose this is important that you disclose this to investors on every side so everybody knows. And you can see Elon Musk doing this a lot, by the way. He likes to have one company and then he launches a solar business out of that company, and he likes to do that. He likes to leverage what he's launching AI out of Twitter. He's trying to he's in AI out of Tesla. Like he's got a good way of doing that too. As long as you disclose it, you're okay. Um, that's the critical point, but it is easier than you think. It's very hard when you sell your company and you got to think of a new business idea. When you're not in the thick of it, I've seen this happen all the time with entrepreneurs. I belong to an organization called EO, and I see this happen all the time where people sell their company and they just can't figure out what they're going to do next. So that's why I always suggest you start, scale, get bored, launch a new company, exit, take some money off the table, repeat.
That's a very very interesting approach, I have to say, and I can, of course, like this is just the second company that I'm running, but I already see that there's so many opportunities showing up while you run maybe a different business, but they are connected to each other. We still struggle, actually, to be honest, on the board level to figure out like which new opportunities are distractions, which new opportunities are somehow complementary, and if we can actually afford not that much from the financial perspective, because many times the business can fund the new opportunities, but from the, let's call it like a focus perspective, whether those opportunities are worth it. So I'll definitely read that chapter.
Yeah, absolutely. And I know you wanted to talk a little bit about catching the wave,
Yeah.
because we're in this sort of AI, and you're an AI company, and you're leading the market. You're doing amazing things in the market with AI, and that's been so one of those formulas that I've used in my life is really to figure out what is it that I like to live in the future. I have always the fastest internet. I have the latest iPhone. I have um, I had number 984 when it comes to the Model X for Tesla, the 984th vehicle to be delivered. And, I'm always trying to figure out how to live in the future and figure out what it is to catch the wave. And here we have a situation, we have an opportunity where a paradigm shift, a technological shift like AI, is the largest shift in our entire lifetime. It's bigger than the internet. It's absolutely much, much bigger. It will mint more millionaires than any other technological shift in history. Like, this is it. This is big. And what I'm suggesting everyone do is just get out there and use the technology. Sign up to as many AIs as possible. I've been very big on custom GPTs and just try it out. It's very easy to do. You can do personal GPTs, or you can put them on public on the store on OpenAI. That's an example. Another example I learned this weekend was Notebook LM. I think this is incredible. You can take any document. I took my Forbes published article on this topic, AI. I cut and paste it, and 1 second later, and within a minute, it produced a podcast that was amazing by this lady and this man that were just talking about this topic. Look, this is what I call subshock. So we had this the big shock, the big paradigm shift was AI, ChatGPT 3.5. That was the time when you saw a lot of things happen and the world shifted. After 3.5 came out, it was a massive change in the world. And then when I talk about, it's like an earthquake, right? An earthquake goes off, and then you have these sub earthquakes. You have these sub shocks that are going to continue to occur, and each sub shock's going to bring about a whole new opportunity in business. And we see that with custom GPTs, where you can create a GPT and actually sell it and make money on the internet. And you don't even have to be a programmer. You can just come up with you just answer questions. It's insane. And then you've also got now Notebook LM. That's going to be another sub shock. We're going to see a dozen, 100 sub shocks over the next 3-4 years. These paradigm shifts are occurring all the time. Now, if you go back in history, look at my history or whatever, going back early. I know you're too young to know this, but there was something called dial-up internet, the information superhighway. That's what they called it at the time. It's hilarious. It was dial-up internet, very low broadband, like 56K. And then broadband hit, and that broadband hit about 98, 99. So you think about people getting on the internet from 93 to 98. That was a big paradigm shift. Then you had broadband take off. Then you had social media take off. There's an app for that in 2010. You might remember that. Okay, 2010. You might remember the app for that. Do you remember a time before cell phones? I'm curious. Do you remember a time before, not cell phones, a time before the iPhone? Do you remember a time
Yeah,
before that or no? You do?
I do. Yeah, I was maybe yeah when I was younger. I remember those like the first Nokias that you could
Okay, yeah.
download a few pictures as a
What was your first
wallpaper.
phone? iPhone.
The first one was I think the second one that was on the market.
The
What was
second,
it? Yeah,
the iPhone.
the
You're talking
second
about the
iPhone
iPhone?
that was yeah iPhone, the second iPhone that was on the market.
So you missed the BlackBerry days.
I miss the BlackBerry days indeed.
Yeah, yeah. Well, you didn't miss much. Don't worry about that. Okay.
Yeah, yeah.
All right. So, I mean, I
Heard
love
a
the
lot
BlackBerry,
about
but anyway,
BlackBerry and about the whole business behind it, but I never done one.
exactly.
Yeah,
So
yeah,
you had this paradigm shift to the app revolution that came in 2010, and then you got this rise of the micro brands, e-commerce brands that took off in 2016 to 2022. That's been a big shift. You can launch an e-commerce business. Shopify now allows you to do it with almost no money at all. You can launch an e-commerce business. I mean, that's the thing. That's the funny thing is the cost of doing anything now. Like you could be a solopreneur, and there's talk now that the first solopreneur will create a unicorn. Like one individual could create a unicorn because you can do so much with the platforms that exist out there today and with the AI. But the biggest shift at all is AI, and it happened in 2023, and we're going to continue to see shock, like sub shock after sub shock. That's going to be opportunity after opportunity that you can build companies around. And I really do like Notebook LM. That's my favorite new one I'm playing with right now. You can take any document, anything proprietary, and turn it into a completely your own podcast. It's hilarious. It's fun. But I also think it has some commercial applications to make money. And who knows where we're going to go next. But we always got to be looking out for those paradigm shifts. Airbnb, the sharing economy. Started investing in real estate on an island that never had Airbnb before. And all of a sudden, it's doing extremely well now because all of a sudden you're monetizing properties that never been monetized before. And if you're aware of these shifts, you're aware of these sub shocks or these sub shifts, then you can position yourself correctly and you can ride that wave and you can become a very successful entrepreneur. And that's what we've done over and over again on Start, Scale, Exit, Repeat. And that's it.
And when did you tell yourself that this is the real wave, the AI stuff? Because I think the most difficult part for most of the entrepreneurs is to see whether this is a real wave, right? Even when we talk about the bored apes, I mean, was it a wave? Wasn't it? I mean, for many people, they had to learn the hard way that what they consider to be the future simply, let's say, really crashed. So how do you evaluate which wave to ride?
Yeah. Okay. So that's actually a great question. And I'm going to lean into chapter 3 of the book, where we interviewed Jeffrey Moore, who wrote a book called Crossing the Chasm. There are a lot of technologies that go into the chasm and never get out. One of the biggest, probably most famous of all time right now is the metaverse. The cartoon characters walking around. We have a metaverse company in our office, IMX3. You can look them up. They're actually, I call them chasm dwellers. Okay, why would I call them chasm dwellers? They're surviving. They're literally taking museums and scanning them in with art and everything, and getting contracts with governments. They're surviving. They're actually building a company. But it's very hard to do that. Sometimes you really do have to pick and choose the ways that you want to get behind. You have to believe in those ways. Obviously, the sharing economy has been a huge wave, right? We've seen massive changes in global behaviors that have made millionaires, many, many millionaires, just based on that one wave. But in the book, we talk about 20, 30, 40 different waves. Just the one I'm most excited about is AI. And the day it happened, the day I experienced it, the day I saw it, the day I could write poems. I know it's kind of crazy, but the day I could write poems, like I just put something in it, wrote an amazing poem. I'm like, okay, this is smarter than me. Like I could see how this could work. And then ding, 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 the bells start going off. And man, when I saw on Saturday, we're talking 2 days ago. We're talking 2 days ago. When I saw Notebook LM, I'm like, holy shit. This is huge. This is another paradigm shift. We are talking about, yes, it was ChatGPT 3.5 was huge. I understand. Custom GPTs are huge. Notebook LMs are huge. We're seeing it's the best time you've never had a better time in history to be an entrepreneur. And it's almost like Tony Stark. Do you know Tony Stark? Iron Man? It's like we're entrepreneurs. We're all like Tony Stark. We strap on that Iron Man suit and we can do anything. I mean, it's incredible what we can do as entrepreneurs. And we don't need as many people to run our startups. That's the reality. We do need AI. And we should plug ourselves into as much AI as possible. And we should we should really understand that. It's never been a better time in the history of this planet to be an entrepreneur than today.
And we indeed see a lot of new companies being set up in the AI space every day. Of course, most of the funding is still going that direction. Now, what would be your advice to navigate? Let's say we establish that this is the right wave to ride. Now, what would be your advice for the entrepreneurs to navigate how to, let's say, surf the wave correctly? So, there's been quite a few products that are obliterated by the new update of ChatGPT and other giants on the market. There are countless of examples, essentially almost every quarter, where you start a startup, you get funded, and then with the new update or with the new product by a tech giant, you know that you will lose the game now. So how to navigate that very uncertain wave?
Yeah. So assuming we're going to go in this tech chasm, we're going to move into a different environment. Jeffrey Moore calls it the tornado. It's this early majority, the pragmatic individuals who are buying your products, and they buy it like crazy. All of a sudden, these innovators, they love these products, but then you go into this period of time where people don't know what to do with it. NFTs, were they good or, virtual reality, augmented reality. We don't know what to do with it. But then all of a sudden there comes to a point, and there's a survival technique inside the chasm, which is really just focusing on, like I told you, the chasm dwellers. They focus on certain niche applications like IMX3 around museums. But then what happens? All of a sudden, we start to hit this tornado. And when the tornado effect happens, there's 3 things we need to do in a tornado, okay, to win. I like to think the first is like be a laser beam, be the best in the world at what you can be. Jeffrey Moore calls it the bowling pin analogy, where you can knock down a bowling pin to get to the other side of the chasm. You got to be the best in the world. Second, make it easy. People hate technology. Fundamentally, the vast majority of the human race hates technology, and we make it too complicated. If you make it easy and simple, they will take the path of least resistance. And number three, which comes directly from Jeffrey Moore, is deliver the fastest. Whoever delivers the fastest in a tornado wins. I'm not talking about the best quality. You see, I left that one out there. See, I said focus, easy, delivery. That's the key, right? I left that out, quality, because I think you're going to be forgiven in a tornado. People just want the technology. They want it now, right? They want it now because they need it now, and you got to be able to serve it up. So what does delivery mean? Delivery means distribution, massive distribution. Whoever can distribute the fastest the products wins in a tornado. By the way, you even have these in trends. We see this with paw.com, with these dog beds that we make, or these dog blankets, or the dog car beds, or whatever it is. You see these products that come to market. We invent them. They take off. Everybody copies. Becomes a huge thing. So who wins in that market? Well, paw.com wins. Why do we win? Because we distribute to 30 different companies before the other competitors can get in and jump into it. Distribution wins. That's it. Those are the three things to win in a tornado. Make it easy, focus, and distribute, and deliver the fastest. That's it.
Amazing. Another great advice, and I think that that's a great teaser to dive deeper into your book. Maybe we can finish this episode on that note. Maybe one last question, Colin. Is there anything else maybe that is not in the book and something that you learned as an entrepreneur that you would like to share with early stage founders? Because this is mostly our listeners are people who are running early stage startups or about to start a company, thinking about it.
Well, I often get that question, and I often get a question like, because you've done something different if you go back. And I actually think it really comes down to believe in yourself. And I know that when I was 22, 23, 24, like, I didn't believe in myself enough. Yet I had the right instinct. And it wasn't until I was like 32, 33 before I recognized the people around me were actually idiots. My business partners, most of them, and not my brother. I'm not talking about my brother, okay? I'm talking about my business partners. And I had to fire them all. And then I took over as CEO, and I ran everything ever since. And I asked, believe in yourself. And the second thing is, I'll give it two of them here, is that I didn't know what the heck I was doing when we scaled these companies. We scaled Internet Direct to 200 employees, 250 employees. I didn't know what the heck we were doing at Hostopia. We scaled to 600 employees. It wasn't until 2005 that I got a CEO coach, a guy named Patrick Tian from Rhythm Systems, who's still my CEO coach today. And it wasn't until I got a CEO coach, until I realized that, as an entrepreneur, we're really good at just getting things started. We ain't so good at scaling. Okay, we're not good at scaling. And the reason is we're not good at scaling is because it requires a whole different mentality around who we are as ourselves personally, right? How we act and behave and work with our people. And it also includes our systems, the systems that we implement, that we put in place. And we're not intuitively, we don't know what those systems are. So I would definitely say get a coach. If you really want to scale your business, get a coach. I mean, you can get a free coach, for goodness sakes. Score, I'll leave it with this. Bridget Weston, we interviewed her, and she mentioned that you can increase your chances of startup success by 3 times. They have 10,000 volunteers. It's funded by the SBA in the United States, if you're an American company, and you can get a free mentor. I'm also involved in incubators, including the one we have here in South Florida, but also another one at NSU called the Alan Levan Center. They do incubate programs absolutely free. They connect you. We have 20 speakers. I'm one of the first speakers that comes in there and helps with strategy. This is free resources. You can take advantage of free resources. You're not alone anymore. This is not the days of Wozniak and Jobs in the garage. Okay. This is the days of you have a community. It takes a village to raise a startup, and that's what you need to do. You need to get yourself involved in a community, and it's a heck of a lot more fun too. That's it.
Perfect. Thank you very much for that, Colin, and thanks again for coming. I'm sure that people took a lot of very useful advice and that they will buy the book and read it or reach out to you with some other ideas. So thanks very much, Colin, again, and have a great day. Hopefully speak soon.
All right. Very good. And good luck at starting, scaling, exiting, and repeating.
And that's it for today's episode of the Startup Huddle. Thank you very much for listening, and make sure to catch all episodes on the startuphuddle.com and follow me on LinkedIn and Twitter for more insights and updates on the world of startups. Thanks again for tuning in.